I think one of the biggest lies being perpetrated in the real estate world, really the real estate investing landscape, is bigger is better. I want to have this conversation with someone I know, respect, and really appreciate, Mr. Brian Adamson. How you doing, buddy?
I'm doing great, Mike.
So we got to talk about this, man. I put out an IG post that bigger is not better. It's actually one of my most blowing up IG posts, Instagram posts, and I know you have kind of the same mindset. But when you hear people come to you talk about bigger is better, and if you're not buying 50 units, you're a loser, and all of those things, how does that hit you?
So here's the good news before we even start our rant
All right, all right.
is that Mike and I have done both.
Oh yeah, no
So,
doubt.
so you guys could come barking up our tree and all, but we're on both sides, right? That's why I love this topic so much because the commercial guys get all pissed off at me, but then the single family and 1 to 4, they'll be encouraged. But I'm gonna tell you, man, I think there's a place for both. Okay, I own is as large as a 40 unit, and I don't have any single family in my portfolio now, but I own as small as a duplex. Okay, but I bought single family years ago. Um, it's interesting that your return on investment, cash committed to the deal, can be, and more often than not, will be far better in 1 to 4 units than it will ever be in a larger asset. It's so much that goes into the operating expenses, the debt service, and what have you, that if you really just focused on cash return, you're probably going to be better suited having it in a smaller asset. Now, I like larger assets, being a full-time entrepreneur. The net worth piece is important, when you're going to lenders and things of that nature. And the larger assets give you that, as well as we're able to manipulate the value and the depreciation factor. It's a myriad of different reasons why I have it in my portfolio.
Mhm.
But I can tell you that in 90+% of the cases, I make more money on my smaller assets.
Yeah, yeah. I have this saying: bigger is better. Pause for dramatic effect. Sometimes in my world, I put everything in the same spreadsheet. And I think that's what actually most people get wrong. A lot of investors I speak with are, resi, forward below, or commercial. There's very few people out there like you and I that's like, hey, I'll buy whatever the best deal is, right? It,
Yeah.
it doesn't, I'm not picky, right? And that's because, again, I put everything in the same spreadsheet. The spreadsheet that I teach and talk about, I use the smallest thing I ever bought was a 512 square foot, 1 bedroom, 1 bath house. The biggest was 20 units. I put all that same in the spreadsheet, and I want to know what has the highest yield, cash on cash, return on capital, whatever your fancy word is, because I want to know that my money's working the hardest, and the hardest means the biggest number. That said, over the years, I have helped people who were residential. They got a portfolio of 8, 10, 11 units, and they hear this bigger is better, bigger is better, bigger is better. And they either buy one or maybe they 1031, which is something I have done multiple times into them. Then they're shocked. I got to tell you, folks, if you're a residential operator, especially single family homes, and then you jump to a 10, 12, 18 unit, and you haven't planned for dramatically more expenses, dramatically more headaches, becoming a counselor, you are missing out, right? The more people you put in a smaller square footage, the more you become a counselor than a landlord. Oh, they make noise. Their dog barks. They're in my spot. They're da 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 da. So again, um, bigger is not better. It just isn't. It might be better sometimes, but it's intellectually dishonest to say it is better all the time.
1,000% intellectually dishonest. I like that, Mike, because that's what it is. It's showing people the wrong trophy, right? Like that's not it. Like for me, the true definition of wealth is the day that you wake up and all your assets pay for your liabilities. It's not a number. It's your number, right? And when I look at the large, now I will say this. Okay, this is my strategy. I'm gonna share it with everybody. I like to put my cash into the smaller assets because my money works a lot harder for me. In my market, I mean, I could put 25% down and make 50, maybe even 100% return in some cases in 12 months. I know that sounds crazy, but it just is. That's why I invest remote. On the other hand, though, some of my larger assets, I raised the capital for 90% of them. Okay. And the reason is if I need $500,000 in equity, I can go to two investors, get $250,000 a piece from them. They're going to make somewhere between 8 to 12% cash on cash initially, okay, which is outperforming the environment that they pulled this money from. Let's be clear. And then also they're going to have a piece of the depreciation, the equitable upside, and over a 5-year period, 5 to 7 years, they're probably going to make a 3x multiple, okay, on their money. And the potential of us being able to cash out, refi, and extract some of that initial, if not all of the initial money capital, out. That's going to change over the next 24 months because of where the market's going. Right. But all I'm saying is that it's not what you do, it's how you do it. The strategy in which I acquire both of these different asset classes appeases me, right? And so I'm getting the best of both worlds of having larger assets that I got other people's capital deployed into, and the smaller stuff where my money can work a lot harder, I put my funds into those. And it's not like, oh, I'm giving them the bad deal. No, I'm giving them a good deal for them. And I'm giving myself the great deal for me. And so everybody wins in that scenario.
Yeah. I think there's something really funny because, again, I've been doing this a long time. I saw the last run up in the crash. I now have seen it. I've been very vocal about this. There's a lot of rookie syndicators that are going to lose their ass. Right. We've all undoubtedly heard about the 3,200 units in Houston, which lit $100 million on fire in a year. Can you imagine? Crazy. Right. But here's the deal, right? The bigger is Betty mantra caused this. And it's really weird because the same bad behavior that caused the housing crash is going to cause the commercial pain. What is that? Short-term debt. Adjustable rate short-term debt. That was the same thing that, right, in 2006, 50% of the loans that were originated were adjustable rates. 50. Just for, grants, 2022 was 98% were fixed. So very different operating environment this year in residential. But bridge debt became the only way to get deals done, right? 2 years, IO, maybe a third-year option. And then bad assumptions, right? How many people back in 06 said real estate only goes up? Real estate's never going to. I went to all the parties, and everybody was like flipping papers and flipping contracts, and everybody was making money, thinking that residential never went down. It was gambling. What's been going down in multifamily? So this is my market. My market of Fresno, California, has traditionally traded at about a 7 or a 7.5 cap, right? When you look at the 2 decades. In 2019, I sold a couple of apartments because they got to a 6, right? So meaningfully below 7.5. I'm like, this stuff's hard to operate and make money at 7.5. It's no fun at a 6, but hey, if you want to pay it, I'll sell it. Dude, they went to sub 5.
Wow.
So guess what? Return to the mean is a bitch. So these are going to go to an 8 or a 9. And it's going to be a problem, right? So there's a lot of pain coming to commercial. There's a lot of new operators that are going to get their heads cut off, but I am ecstatic. Bigger is better soon when people get their heads cut off. So, but again, it's not better all the time.
Without a doubt. And I would just caution anyone going out there to get 5 units plus. And I even recommend this for smaller res. But certainly when you get into the apartment building, you have to go find a property management company that has that kind of footprint that can help you run your business, because I promise you
don't want that.
Here's a clue. The reason why we go out and buy these things from mom and pop operators, that's a clue. Okay. The reason why we get deep discounts from mom and pop operators, that's a clue, because people don't understand that it's a totally different ball game from managing even a 4 unit than it is to a 5 or 6 or 10 unit. Yeah. It's a business, and you need someone that understands that business to be your liaison and run that thing for you.
Yeah, very cool, man. Well, Brian, do me a favor. Where can people find you? You've got a growing YouTube channel, Instagram page. What's going on?
Yes, sir. You can find me at Brian Adamson Real Estate and Brian Adamson Official on Instagram.
Awesome, man. Thanks for all you do, buddy. Take care.
Thank you, man.